Welcome back to another Stock Market Open live stream. Well, GameStop is starting to roll over a little bit here in the pre-market, down about 4.29%. We're going to be paying heavy attention to what's going on with GME today, but today is also a very special day. We're going to be getting the JOLTS report. JOLTS jobs data. That's a big one. And so we'll get the JOLTS report at 7 a.m. California time. So we got about an hour and a half, honestly, to go here for that. Got some positive Chinese delivery data here for Tesla that might be pushing Tesla stock up about 30 to 40 basis points this morning. You're riding about the 175 line right now. You're riding 1150 on NVIDIA, and the NASDAQ dudes are down about 30 bips going into the pre-market here. Right on the 69K line for BTC as well. So, what's going to happen today? Well, folks, today's going to be that day where, once again, we get to see what happens with the momentum movers. Will the momentum movers prove to actually have momentum? Yesterday, we got GME up about 21%, and AMC was up about 11.09. These are relatively low movements in the grand scheme of the momentum rally that we even had just a few weeks ago. You could see AMC at one point ran up to almost $12 per share and then proceeded to bleed after that. Very, very common. We know this. We talk about this regularly, that when a momentum play is in effect, you could hop on the trend, you could join the trend, but you have to get out quickly because they always end up bleeding. That's very, very clear. So the same thing happened here with GME. We had about a day and a half, maybe 3 days. Well, I mean, you had a few days going into it here, but you had quite a significant rally and pump here, only to see a sort of bleed down back to about that $20 a share level. And then here, thanks to Roaring Kitty's post, likely a 21% surge in the stock. The stock in pre-market, though, yesterday was up about 75%. At one point, I think as much as 90%. So a pretty big reversal there in the fortunes, so to speak, of the GME. A line that's really at play here is the 3057 line. Yesterday, we actually ran a poll during the pre-market, and we were sitting right here during pre-market. We're sitting between these two fib lines, 36 and 43. And we ran a poll and asked, at open, is the stock more likely to go to 52 or to 30? And 37% of you said it was likely to go to 32, as opposed to the 60-something percent of you that said it was going to go to 52. Those of you who said it was going to 32 were right. That's exactly the line that was in play all day long. It's a simple fib retracement. These are very simple to draw. This is not hard technical analysis. It's not like some Fugazi, Juju, or whatever. It's pretty straightforward. Personally, I like trading around the lines too. I'm a big fan of that. I usually, I tend to do really well in trading if I trust the lines. And unless, of course, you get a consolidation around the lines, right? Like if you're buying options and the stock is consolidating around the lines, you're screwed, right? But outside of consolidation, the lines tend to do very well. Although lately we've kind of been trying to find out, like, all right, well, what is the trajectory? I mean, look at something like Enphase, for example. We've got a diagonal line, sort of a trend line for it, where the trend line has been slowly up here. But in terms of our usual, bouncing around the 113 to 118, we're outside of that zone right now. So we're kind of lineless until about 161, which is somewhat bullish for the trajectory here of Enphase. But you are getting lower highs on the recent days. So it's always difficult to say, oh, for sure, yeah, now's the time to start making that bet that Enphase is going to skyrocket. I don't know, at some point they will. The interest rate sensitive. It's just a matter of time. And unfortunately, it all seems to require more patience than everybody seems to want to have. But that's okay. It's part of the biz. All right. Guitar Dan says, love the trade callouts. CPA paid off. I don't know what you mean CPA paid off. But anyway, so welcome on in. Someone says, so buy more Enphase. Hey, not personalized advice, but I mean, it would make logical sense from a thesis point of view that Enphase should perform better in an environment where rates are falling, right? So we'll see. All right, so what else do we have? Well, we're going to watch the Qs going into the day, and then we're going to look for some of the good old fundies. Posted a video this morning on inflation and rates. Got another video that'll be posted at probably about, I think I have it scheduled for like 6 or 6:30 on Roaring Kitty on the whole stock market manipulation complaints that were going on. We're going to talk a little bit about that. Then we've got Intel trying to beat up on Nvidia, though I feel like this is like, like an ant throwing a rock at a Goliath. But anyway, Intel started talking up new products, including their Xeon X or their Xeon 6 data center processors with more efficient cores to try to give them an edge over their rivals like AMD or Qualcomm. I don't know. Intel for me was always sort of a bet on their fabs actually making money, and as soon as they said, oh yeah, it'll be 2030 before they start making money, it's no surprise to me the stock sold off. That was sort of a bummer summer of news, but oh well. That's what happens with the value traps. They're often a trap. Oh well. All right, let's listen in over here for a moment. What do we got here? AI-powered physical therapy. Do we care about that? I don't think we really care about that. Where's my remote? AI-powered physical therapy. Come on. Let's go over here. Let's go look at something else. Alrighty. What do we got over here? Hey! I just want Doombug. Doomburger. Not all this other crap. There.
Sources telling the Wall Street Journal that E-Trade is considering removing the meme stock leader Keith Gill from its platform. E-Trade and its owner Morgan Stanley are concerned about potential market manipulation. GameStop shares moving on the back of Gill's recent social media posts showing his massive, and I mean like monster, position around this name.
People saying that if the gains stick, he stands to gain something like $170 million, something in that order from the options trading. There is this question of what is manipulation. I mean, this is pretty blatant manipulation if you believe that putting your beliefs out there can drive a mob to go buy something, but it's not covert. He's not really hiding anything. It's really clear what he's doing. So it raises a lot of questions around both the legal liability for these companies and, as you pointed out earlier, the business liability of going after someone who is so incredibly popular with a pretty mass cohort.
Yeah, that's a big mistake. I actually, I give my entire full opinion on this in a video that I'll have on the main channel in like 30 or 45 minutes. And I actually go into where they could potentially get Keith Gill if they wanted to. I don't think that what he's doing is necessarily wrong. I'm a fan of I actually think the transparency is cool. I think hedge funds and Congress folks should all have to be immediately transparent with their trades, but you don't get that from them. Sometimes I think there's a reason these insiders in Congress are able to outperform the market year after year, maybe because they're using insider information. But anyway, stay tuned for that video. I think it's really, really interesting on the how they could try to go after them, and some more of my opinions on that. So in the meantime, we'll be watching for JOLTS today. Let's look at some catalysts coming up. Ooh, caddies. Yeah, so really, this is going to be employment week, and employment is a big deal because yes, we have a lot of undocumented immigration, illegal immigration, as well as legal immigration. Like, immigration system's a little screwed right now, and so we get a lot of catalysts this week on jobs which are affected by immigration. I think it's important to remember that a lot of the job surveys, they don't ask about someone's legal status when households are surveyed or when businesses are surveyed in terms of how many employees someone has. So that's a little problematic. because for sort of the normal run of things, because it basically says, we might avoid a jobless recession for way longer because the data is skewed thanks to illegal immigration, which sort of distorts the normal way things should be operating. But then again, nobody really wants to be in a recession. So what are the catalysts that we have this week? Well, we have JOLTS today at 7 a.m. And let's grab expectations for JOLTS. It's really jobs week here. I'll just take a second to have those ready. All right, JOLTS, we are looking for, so the estimate is 8.35 million. That's the estimate, 8.35 mil. That would actually be lower than the prior, which was 844. Prior was 8.488 mil. So that would show another decline. You really probably need to see JOLTS get down to about 6 million job openings to match the level of unemployed folks that you have. You do have the ADP report tomorrow. So that's a jobs report. And that comes out at 5:15 a.m. And the estimate there is 175K. And then we have the jobs report on Friday. So this is the, that would be the BLS jobs report, right? BLS jobs report, Friday. And that one we are looking for an unemployment rate of 3.9%, average hourly earnings 0.3% for the month over month average hourly earnings, and the participation rate is expected to be 62.7, and then the actual non-farm payrolls are expected to be 185K. So pretty consistent with what we've been seeing. Those are the expectations. You will also get, this morning at 7, you're going to get factory orders. So let's write that down too. Factory orders expected at 7 a.m. today, 0.6%. Headline with X transportation at 0.5%. Then you're going to get durable good orders as well. Now that's going to be big for like an Enphase or even a Tesla or a Whirlpool. So durable orders expected also at 7 a.m. today. We are looking at 0.07% headline. And X transportation, so removing those cars, 0.4%. So those will give us some insights into some of these larger orders. Then you've also got tomorrow ISM services. ISM services tomorrow, where we'll get prices paid, expected at 59. And services index expected at 51. Now keep in mind, yesterday we had ISM manufacturing. So to clarify that, yesterday was ISM manufacturing, not services. That came in at 48.7, weaker than the 49.5 expected. And prices paid came in at 57, weaker than the 59 expected. Now keep in mind that any number under 50 is contractionary and over 50 is expansionary. So prices paid at 57 still implies that manufacturing prices are still going up. Something to keep in mind. So that's probably why we had that weird like U in the market yesterday. So I'd call that maybe slightly bearish as prices still in expansion, with manufacturing further in contraction. So yesterday, if you look at the 5-minute chart, you had this bizarre like U shape in markets yesterday, where the second half of the day really ran up. A lot of consolidating yesterday. Challenging to trade in this sort of environment, as you get sort of trapped multiple times. But it's like not as bad as what you saw on Friday, which is also this giant U shape. So these U shapes, these are not my favorite times to trade, these U shapes. I don't like these at all. They're a little unpredictable, but let's see if we get another U shape today. I mean, I doubt it now that we're predicting it, but let's see. All right, let's take a listen.
Look at what the market prices when the Fed is doing their first cut. They always underestimate the amount of cuts that are actually delivered. And so, yeah, I think it probably will be viewed as preemptive initially, but then we'll have to see if it will be enough.
Aditya, do you agree?
I'd say on the Fed, not so fast. We do have the first cut in December, but you have to recognize that over the last 4 months, the core PCs...
Thanks, Snook, for being here. Appreciate it.
Right? The April data, that was viewed as a big improvement. Well, guess what? We still annualized to more than 3% in April. So there's still some ways to go for inflation to come down. I agree that some of it is housing, but they can't look through that. Right? Because you just can't cherry pick in the situation that the Fed is in right now.
Oh, come on. You should know better. This is not cherry picking to look through housing. The reason people look through housing is because the market data shows you don't have inflation anymore in housing, that rents went up, but now they're flat to declining. And that's not cherry picking. That's if anything, you could argue that the reports that we use for inflation are so lagging that they're the ones cherry picking. I'm surprised they would make that argument on TV and not acknowledge that difference. That's a little surprising to me.
The first quarter GDP data on both public and private investment, you got this very large surge in public investment as well as manufacturing structures, which was related. The public side was related to the IIJA, the private side was related to the CHIPS Act and the IRA. Big deceleration across all of those components, still growing, but much slower in the first quarter. So it looks like that stimulus that impulse to growth has run its course, which makes sense, right? Because at a certain level of investment, you can continue growing the capital stock, but investment doesn't need to keep growing. And I think that's where we are right now. So the fiscal impulse seems to be fading. That means that broadly supply shocks are becoming less of a story, and it's more of, is demand going to accelerate or is it going to cool off?
You've got tons of data on bank balances, what people are spending month to month. What's that data telling you at the moment?
So it still looks like spending's holding up pretty well. It's a little bit difficult to translate the daily data into monthly growth rates, so we still don't have a forecast for May retail sales, but May looked pretty solid from what we've seen in the daily data. We'll see what it means.
Don't want to get JP Morgan jealous. Chase has got tons of data, lots on balances. What do you see happening with the consumer?
Well, we do see the consumer continuing to spend, and I think when I think about what drives that, ultimately it's income growth. So again, it all ties back to this labor market report. We do see consumer sentiment is soft. We do see from consumers that they're trading down, that they're a little bit more conservative. We see delinquency rates are rising for lower income consumers. So there are cracks forming, but ultimately, as long as you're employed, you can continue to keep spending. And that is ultimately what we're seeing.
How much do you see immigration and sort of the supply shock from that level kind of changing the numbers or making it look better than it is on the labor front? That's what Steve Glitter was saying earlier.
I think that is part of the story. The Fed has acknowledged that's part of the story. It's part of the
I hear you, Cameron.
Balancing in the labor market that we just discussed. And it's something that we're going to have to continue to monitor. But I think probably, the bulk of that impulse, the surprise associated with immigration and the resiliency of the labor market associated with immigration, we've now factored that in. So, I'm not sure exactly how much more we're going to get from that going forward, particularly when, the whole regime could change in November.
This raises this question of what is normal. I mean, on a lot of levels, and I mean that sort of an existential way too, but also this idea of what are we going back to? Aditya, do you have a sense of that?
So if the challenge with doing that is that any of these macro models that you run to kind of get trend growth, R-star, they all tend to be a bit backward looking. So you're not going to capture structural changes until it's too late. Instead, I think you have to think about, what factors might have driven structural changes and then just make sort of qualitative judgments on how long they can last. So on the fiscal impulse, on the labor supply shock, we think that's probably not going to last because with labor force participation, ultimately demographics will win. With immigration, even if you maintain current levels, it's difficult to keep growing at these rates. So the labor supply shock has probably run its course. It could last for another 6 months as these new entrants, take time to get jobs. And then on the investment side as well, the impulse has probably run its course. So at least in growth terms, we probably go back to roughly 2% growth.
The data this week setting the stage for the Federal Reserve next Wednesday. Let's talk about that briefly. Three-part act: statement, forecast, news conference. Walk us through where we are in the dot plot at the moment, how you and the team, Kelsey, expect that to sort of evolve in the next week or so.
So the market always moves ahead of the Fed. And just to go back to this conversation on the neutral rate, we can all hypothesize what the neutral rate will be, but what are the markets saying? The markets are saying the neutral rate is higher. I don't know if it's as high as the trough that is currently being priced. The terminal rate right now is around 3.75, 4% is what the market's pricing. I think it may not be that high, because that would imply a 2 or 2.5% real rate. But that being said, the market is sending you a signal, and I think we do need to listen to that. Similarly, when we think about the Fed next week and the dot plot, the market has adjusted to anticipate.
Oh, is the Fed already next week?
Cuts this year. And so, my expectation would be that you show, instead of 3 cuts, it's going to show 2. I don't think it could go to 1, but it could. And then I think we are on a journey for the long run dot to continue to move higher. So we saw that first move from 2.5 to 2.6. And to be honest, it's actually been going on for a while now. So if you look at the minimum and the maximum submissions, those had been drifting for really a year before the long-term dot actually started to move. So we're in a transition there. But that happens way after the market sniffs it out.
You're looking for a couple of cuts this year. You're looking for one. Do you see the Federal Reserve coming down to your view of the world next Wednesday?
It's going to be a close call between 2 and 1 cut in the dot plot this year. The question is, on the one hand, do you want to take that optionality out for September, or do you want to leave it in? And on the other hand, are you concerned about sounding too dovish and kind of moving incrementally, knowing that you'll have to move again? Right? So it'll be
yeah, all right. I'm going to pull off this for a moment. Yeah, this is an interesting report. I tend to make a more detailed video on it. But yeah, basically there's this talk about the number of banks on the rating of a 4 or 5, which a 5 is like highest risk for a bank going insolvent. The number of banks on the list rose from 52 to 63 in the first quarter. Now, something that this report doesn't reflect is it's pretty lagging, and it's heavily impacted by what's going on with rates, which what I'd like to show is, let's go ahead and grab CNB Sizzles here, 10-year, and let's go to the year-to-date. So, yeah, here's your year-to-date. This is what amplifies problems for these banks. So, as you can see, in the first quarter, rates were actually lower by a good chunk than where they are now, which means that list of 63 banks is probably likely to actually grow in Q2. Now, keep in mind, we've got like 4,000 banks in America, so you're going to see insolvency and you're going to see collapse at some point. So I totally agree that you're probably going to have another wave, sort of a smaller bank, either consolidation or failure, almost certainly. But yeah, this is an interesting report, and I look forward to going through it a little later. But it's a good call out. All right, let's keep going here.
That traditional processors like Intel's are running out of steam. Gelsinger saying, quote, unlike what Jensen would have you believe, Moore's Law is alive and well. We see this as the fuel that's driving the semiconductor industry to reach $1 trillion by the end of the decade. Intel has fallen behind rivals with revenues slipping in recent years. Gelsinger was brought back to the company 3 years ago to help turn things around. That's your Bloomberg Brief. John?
Yeah, thank you. Thanks for this morning. I think to really help that stock, Pat needs to stop talking about Jensen, and Jensen needs to start talking about Pat. Wouldn't that change the story?
Sure. Good luck with that.
Because when Jensen starts talking about your name, that's more helpful.
Yeah, if you're just saying, we're coming for you, good luck with that.
Yeah, I'm not sure that works, although the stock is up in early trading. Up next on the programme, we'll set you up for the day ahead. We'll go back to Canada and look ahead to Friday. From New York City, the opening bell, about 40 minutes away.
All right, but yeah, I did also see this. I thought this was interesting. Biden vetoing this SEC resolution here. So this resolution basically provided guidance on how banks can handle customer crypto assets, treating those assets as liabilities. And so there was a resolution to basically overturn this rule, and the Biden admin vetoed it. There's a little bit more to this. You know, Biden and the team were suggesting that, you know, this could have risked the well-being of consumers or investors, and others say, what are you talking about? Like, getting more access to safe custody for crypto would be better and safer for consumers. It just seems like sort of your standard political nonsense of back and forth over who's right, who's wrong. Personally, I think you need substantially more effort from Congress and an administration to support crypto and keep people safe.
But we're not doing it just in the United States. We're working with our allies and partners to do it, so that we're actually putting real pressure on the Chinese from all sides. If you look at the statement that G7 just made, that was an important indicator that China's not only going to face tariffs from the United States, but from a collection of countries that want them to play on a level playing field. The second thing that we're doing is we're not doing them in a broad way that would increase taxes for the American people. I saw a recent report that said that an approach that put a 10% tariff across the board would be a $1,500 tax on each American. That's not something the president has done here, because our goal is to make sure that we create a level playing field for American firms and workers, and the best way to do that is not America alone, but America with our allies and partners.
I have a broader sort of domestic question, and it's a political question, which is, you know, some polls suggest that a majority of Americans think we're in a recession right now.
Wow.
Think we're in a recession right now, which I would argue to you is misinformation of sorts. But then the question arises why they think that we're in a recession. I'm curious why you think that they may think that, and also to the extent that that's a messaging problem for the administration, why you think you've landed in that spot.
So as you know, Andrew, I don't do the politics. What I do is the economics. And what I know for most Americans is that we've been through a very tough period, not just here in the United States, but around the world with a pandemic. And while we're coming through that, and our economy is doing better than any major economy in the world that is developed, there are still challenges that Americans face. But the thing that gives me confidence that we're making our way through it is 16 million Americans have decided to start small businesses. You don't start a small business if you don't have confidence about your ability to sell the goods and services that you have. We have record low unemployment, but we've still got to do more to make sure that those Americans who are still working to get past a pandemic that was hard have access to the goods, the services they need to make sure they can build the opportunity they want. So my view is that the challenge that the American people are facing is one that has to do with high costs, and we're doing a lot to try and bring those down, from what we're doing on prescription drugs to advocating building more housing to making sure that we bring down the cost of the goods they need. So
where's Janet Yellen?
I'm not going to
making sure we bring down the cost of housing. Build more then.
Pricing issue, just on inflation broadly. There was a sense that things were getting under control, and now it appears from what we hear from Neil Kashkari and others that they're saying maybe there's a rate hike in the offing, which would suggest that they don't think that inflation's under control. Do you think it's under control?
So, as you mentioned, I'm not going to comment on the Fed.
You don't have to comment on the Fed.
But what I will say is that we all know that look at where we started. CPI got to 9.1. It's down to 3-something now. We expect it to continue to come down. But I think for most Americans, they're not paying attention to PCE or CPI. What they're paying attention to is, what does it cost for me to get gas in my car? What does it cost for me to get food? What does it cost for me to get housing? On gas, it was at $5 a barrel in 2022 until we used the Strategic Petroleum Reserve and took actions to bring them down. Now it's about $3.50, so it's come down. On food, while the numbers...
All right, this is highly boring. Let's try Doomers, because this is just going to be like propaganda. Like, oh yeah, we have done so much for you. Okay.
Inflation and strengthen the economy. If that wasn't coming to pass, there could be an understandable kind of diffusing of some of that enthusiasm.
Because reacceleration was also a fear. Let's go back 2 weeks. S&P Global PMI picks up, breaks out, and people are starting to worry about reacceleration. And the Federal Reserve may be considering hike in interest rates.
If you have a Federal Reserve that is this data dependent, that doesn't seem to have any framework, well, guess what? The market's also going to be incredibly data dependent. It's going to be swinging around. This raises a question about fragility. It raises the question about liquidity. A lot of people feel a lot of angst. Why should anyone be having conviction? How many people are actually trading in this kind of capacity? Look, we're going to look back at this time as a historically fascinating time. While we're in it, it feels rather soupy.
The lack of a strategy. Mohamed El-Erian has talked about that repeatedly on this program. He'll be with us on Friday to break down that jobs report. And I imagine he's got some things to say as well going into next week with that Federal Reserve decision just around the corner. Before we get to Friday, much more to talk about through this week. Lots of data, lots of reaction to it. Emily Rowland of John Hancock's going to join us. We'll catch up with the former Barclays CEO, Bob Diamond. Looking forward to that. The former Federal Reserve Vice Chair, Richard Clarida. We'll talk about that lack of strategy. He'll have plenty to say. And we'll speak to Marilyn Watson of BlackRock on this bond market. From New York City, thank you for choosing Bloomberg TV. This was Bloomberg City.
Yeah. Boring. All right. 34 minutes until the market opens. Let's see what is inside. Enphase down 43. IWM's rotating down. Tesla can't figure it out. It looks like it was trying to go up, but now it's rotating down. But the Qs are rotating up. Nvidia's coming down a little bit. What are the big movers in the morning here? Crown Electric's down 8, Faraday Futures down 4, GameStop 3. And if I go to the upside, you've got some small caps, Sim, Tesla at about 40. Pretty chillax so far. Chillax day. Let's see how this moves. Okay, let's see what else there might be. So, what? See what the suits have to report to us. Rabobank talks about, what is this? Oh, interesting. Yeah, they talk about the survey. That Chicago PMI that we got last week. Oh, man. I was not expecting that to be such a big catalyst for the market. It was very annoying. Very annoying. Did not like it. All right, let's see. Okay. There we go. Let's see what they have to say. All right, so this talks about the Chicago PMI on Friday. And then we saw the Monday ISM disappointment. Both of them created this sort of like U trading market, right? I'm going to write that down. Both created a U trading market. Kevin did not like those. Yeah. Okay. Okay. The numbers are still high. That's for the prices paid number. So the prices paid number high. We talked about that a little bit earlier. Still high on prices paid. Bad harbinger. Employment rose just ahead of payrolls. So could be a good sign for employment. Bonds liked it. Continue to focus on the stag and ignore the inflation. Stocks had an interesting day, given stocks once again made stonking returns before being halted. Right. Those were the momentum movers in the morning. Kind of a relaxation pretty quickly. Give us actually anything about this? Energy markets, volatility, political volatility, elections, the glitch. Nope. So they mostly just sort of observed that the data we got on Friday and Monday was a little less desirable, a little more inflationary, and a little less expansionary. All right. Thanks for not much, Rabobank. Could have had some more info in there. It didn't really tell us much. So that's a Rabo. About, let's see here. What's Morgan Stanley up to? Ooh, a Mike Wilson piece. Good old Mike Wilson. take a peek at this. All right. Both stocks and bonds oscillated around Fed speak and macro data releases. Oops. Last week, as equities held key technical levels, we may see further index gains in the short term, but we don't advise chasing low quality trades as we remain in a later cycle environment. So, I mean, I think that's a big question. Like, are we late cycle or early cycle? Usually you see employment in government. So usually government and healthcare employment rise late cycle. Usually. And that's what we're seeing right now, which somewhat implies from a jobs point of view that we're late cycle. We're not convinced lower rates offer a comparable benefit unless they're sustained for a longer period of time and accompanied by stronger growth and pricing power. Continue to see... here's a counterbalance to the small cap argument. See, the Russell 2000 is really your index for small caps. And a lot of folks are saying, oh, yeah, you should go all in on the small. How did Tesla just go down 80 bips? What happened? Oh, yeah, it just tanked. Look at that. I have another computer up over here watching this. Let me, and there we go. Here are the non-average candlesticks. So what just happened on Tesla? Let me see if I can find out. That just came out of nowhere. And I wanted to maybe trade Tesla today. But now I'm like, okay, what happened? Musk tells NVIDIA to ship AI chips for Tesla to X. Oh! That's bad. No. 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 This just looks so bad. Elon. Oh, no, 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 no. 3 minutes ago. No. No. Emails circulated inside of NVIDIA and obtained by CNBC show that Elon Musk told the chipmaker to prioritize shipments of processors to X and XAI ahead of Tesla. Bro, no. This is a... Dude, this just killed his stock comp. This probably just killed his stock comp plan. But he's probably going to say fake news. If it, like, he's probably going to say fake news. Since I'm going to tweet this, since this would kill Elon, if this is true, it could substantially hurt Elon Musk's chance of getting his stock comp June 13th. So I expect Elon to post that this is fake news soon. Yikes. Okay, I tweeted it. I did it. I did it. I mean, am I wrong? I don't think I'm wrong about that. If this is true, it could substantially hurt Elon Musk's chance of getting his stock comp June 13th. I expect Elon to post this is fake news soon. Okay. Anyway. So, yeah, Tesla's falling to my 174 line. Look at that. It's like perfect. Oh, come on. All right. Am I going to cross Tesla off the list? I don't know. I make little lists of like trade ideas that I'm thinking of, or like things I'm gonna watch on the day. Anyway, I think if you go to the non-averaged here. It's already coming back up to 175. Yeah, it is. But it's just still, this is annoying. This is like, people are concerned about Elon prioritizing his other startups over Tesla. And it's just like more and more and more, it's like, that's exactly what's happening. At least that's what it seems like. Musk says he can grow Tesla into a major player in artificial intelligence, and the company is spending heavily on AI processors. By ordering NVIDIA to let X jump the line ahead of Tesla, Musk delayed the automaker's receipt of $500 million in processors by months. Dude. Every day it's like some bad news about how Elon's doing something bad with Tesla. And again, I know the usual response is, oh, it's just fake news. You know, what do they say? Like at some point it's like, walks like a duck, looks like a duck. starting to think it's a duck. Musk said they'll increase H100s from 35,000 to 85,000 by the end of the year. Said they'd spend $10 billion this year in combined training and AI inference, which is scary because they're already negative $2 billion free cash flow Q1. But emails written by NVIDIA senior staff and shared widely inside the company suggest that Musk presented an exaggerated picture of Tesla's procurement to shareholders. And this is how you just get sued by the SEC. That's not good. Correspondence from NVIDIA staffers also indicate that Musk diverted a sizable shipment of AI processors that had been reserved for Tesla to his social media company X. By ordering NVIDIA to let privately held X jump the line ahead of Tesla, Musk pushed back the automaker's receipt of more than $500 million in GPUs by months, likely adding to delays in setting up the supercomputers Tesla says it needs to develop autonomous vehicles and humanoid robots. Elon prioritizing X H100 GPU cluster deployment at X versus Tesla by redirecting 12,000 of the chips. That's a lot. It's like I thought, okay, maybe it's like a few, 100 people or whatever. Okay. See, but how does it feel like a hit piece? Somebody wrote this. This feels like a hit piece. How does it feel like a hit piece? Like, let's put it this way. If you were BPA LA News and 20 people from NVIDIA came to you and yo, check out this email we got. This is what happened at Elon. How is it a hit piece if you're reporting it, if it's true? And you're looking at the emails going, I don't know, I mean, maybe these 20 people at NVIDIA are a fraud, but that looks pretty real. How is that a hit piece? How is the truth all of a sudden a hit piece? That doesn't make sense. Just because it looks bad for Elon, it doesn't mean it's a hit piece. It just means it's news. Now, it could be totally false, right? I'm making up the 20 people thing, okay? I'm making an example. But anyway, I think that's very interesting. Anyway. So, Alt-R, you want me to get rid of my FPS? Okay. The more recent email from late April, Musk's comment on the first quarter call conflicts with bookings, and his April X post about $10 billion. The email referenced news about Tesla's ongoing drastic layoffs and warned about headcount reductions and delays at Giga Texas. The new information from emails read by CNBC highlights an escalating conflict between Musk and some agitated Tesla shareholders who question whether the billionaire is fulfilling his obligations to Tesla while also running a collection of other companies that require his attention, resources, and heavy amounts of capital. Yeah, and that's the frustrating thing. It's like a lot of his companies, they kind of like, I don't know that they're at the point where they're supporting each other. I would say they're not. Like I always try to put myself in the shoes. I'm like, well, I have other, companies as well. But HouseHack benefits from YouTube. And, my broker dealer benefits HouseHack. So, and they all benefit each other. But in this case, X is at least appearing to take from Tesla. That doesn't look good. And it's certainly taken Elon away from a time-based POV. Let's see here. Grok, Truth, GPT, blah, blah, blah. NVIDIA, let's see here. Everyone, they're consuming all the GP. Okay. Musk has promised to build a $500 million dojo, water-cooled cluster, right? But then they said that was more of a, like, a long shot. Those were his words. Oh, yeah. I think this person's right. Joel, or Joel Fleming, a securities litigator, said that by letting his private company skip ahead of Tesla in procuring critical hardware, Musk is making his conflicts of interest readily apparent. Yeah, that's not good. See, like, this right here would be something like the board should have probably decided, not Elon, if it was done by Elon. It's just a bad look. That's what it is. It's a horrible look for his SEC, interviews and that. But like more and more of this crap just keeps happening. It's like, Elon, you're not helping yourself. Why? I don't know. Maybe he'll come out and say, "Hey, we're gonna get the Blackwells instead. We're gonna get the better versions." That's probably, he might say that. I should link the story to the tweet. Let's see here. There we go. Link the story. And then I could also say, also possible that Elon is prioritizing Blackwell orders for Tesla or more, or any future iterations. I'm sure there's an explanation. I think that's just what's missing right now is the explanation, right? So it's Elon's POV. Oh, well. Yeah. What was this? You had... Tesla... What was the quote around... Oh. Tesla is no longer compute constrained. Look at this. Tesla is no longer compute constrained, running out of excuses for self-driving. Elon Musk said Tesla is no longer compute constrained. So maybe they just don't need it. That's possible too. I guess I could add that to the X post. Now that we're AI, okay, here we go. What is this? Tesla AI is very underrated. I agree with that. 99% of people have no idea. An improvement will accelerate dramatically now that we are no longer AI compute constrained. Okay. Well, that's interesting. This could be why Elon diverted some 12K H100 shipments, if true, to XAI. Tesla is no longer AI training compute constrained. Well, that could be a good reason. Could mean Tesla is waiting for Blackwell chips. I think that's a reasonable POV. Okay. Yeah. All right. See, now you just buy calls on the assumption that Elon's going to tweet and go, fake news. Anyway. All right, let's see here. You'd think OPEC turning the oil knob off would increase oil prices a little bit. Consumer pricing power, okay? Yeah, oil prices down. Oh, wow, Brent's down at 76.9. My gosh, look at the crash. It's like the opposite of what OPEC wanted. That's funny. FSD is solved. And it says Andrew. Maybe. Maybe they don't need the chips anymore. FSD is already pretty good, yeah. It's just you want the board involved, so so that way you don't have that conflict of interest. But that is a crazy dump there on oil. Bank of Canada, rumor it will be really close to a vote. 50-50 chance of cut. Oh, that's interesting. Robot Kevin talking so fast while typing robot mode. Well, if I say the same thing, it's it's actually pretty easy to type. If I'm typing something different, then it's hard. Tesla does have low cash flow. This would help cash flow. That is true. No, we can't guarantee that X will provide AI software to Tesla. That's a thesis, but that's there's no indication of that actually happening. Yeah, interesting commentary. It just, the problem is it just doesn't, the optics are bad, right? The optics are bad. Words per minute? I mean, if I'm like really trying, I don't know, like 100. I don't know, let's do it. Let's do it for giggles. We got 13 minutes until the bell. My favorite one is learn2type.com/typing test. I don't know, I've used that one for like years. Oh, but I don't like these keyboards. This is a mechanical keyboard, so it's like noisy. And I'm probably gonna screw up. I don't even know why we're doing this, but it's entertaining. And somebody said do something other than talk about Tesla. So I'm like, okay, we'll do a typing test. And then we'll actually get into seeing what the sticks are doing. But yeah, I prefer like a laptop keyboard, honestly. All right, I haven't read this yet, and I won't. I'll just go for it. With this speech, he commenced a second fit of yawning and again howled like a wolf, as he had at first. The innkeeper, hearing his tale and believing what he said, became greatly alarmed and, rising from his seat, attempted to run away. The thief laid hold of his coat and entreated him to stop, saying, "Pray, wait, sir, and hold my clothes." That should be hold my beer, "or I shall tear them to pieces in my fury when I turn into a wolf." Boom. 108, 105 adjusted with 3 mistakes. I guess that's okay. I could be better. I think if I was on a flat keyboard, I could probably bump that by like 10 words per minute. Oh well. I guess it's not bad for being live. Okay, cool. So, let's go what's going on with the stocks. So, this person like, 108, laughing my ass off. That's ass. Now an IQ test. You know, I took one of those along with a COVID test the other day. Got my results. I got a pass on my IQ test, and I got an 80 on my COVID test. Supermicro's down another 1.5 in the pre-market. Tesla's at it's in this mid-range here. right between the 175 and 174. Let's see here. AMC's down 3.6. Nvidia's positive. Yeah, look, Nvidia's trying to break out of that 1150. It's gonna be a big. That's gonna be a big move today. A big one potentially. It wants to pump into the open here. That's crazy. So oil's down. Nvidia's trying to move up. Tesla, it looks like, oh, look at that. It's trying to rebound to its one. I wonder, we got to look at when Elon replies. I don't know if he's awake. He usually stays up late. Wait, Donald Trump has said he'll stop electric car sales? Let me see. Can Trump really slam the brakes on EV sales? He has vowed to shred Biden's EV policies and threatens you won't be able to sell those cars. Wow, Trump really hates EVs, huh? I think that's like the pro-union of politics. Yeah, anyway. But let's see here. No. Last tweet from Elon was 9 hours ago. Oh well. Greenwave 4.2, Monday.com. How have they been doing? Still trending down, seriously? Because they had their earnings, which were great, and they've just been on a bleed. It's honestly, though, because of the, I think what you're seeing is a lot of the software industry is just a little nervous now because of potentially slowing growth from companies like Salesforce. Although even Salesforce has been bouncing. I mean, you go to CRM, and CRM's bounced off of the line that I drew. It actually went a little lower there, went to 212, but I drew a line at 215. Yeah, GameStop almost down 6 in pre-market now. Wow. All right.
Whether Trump or Biden wins, we'll have...
Boeing says safety is our plan. That's such a joke. I'm going to change the channel.
And avoiding hidden risks of buying...
Oh, yeah. Let's listen to these guys. Gosh, they have a new ad like every day, it feels like. Yeah. All right. What else? Let's see here. Yeah, Tesla shares drop with report Musk is shifting AI chips to XAI. 12,000 GPUs. Blah, blah, blah. All right, we've already seen it all now. Okay. All right, what else? PIMCO says generational reset on yields to spur bond revival. Okay. Dell AI server sales can boom, but not profit. Yeah, that's what we saw in their last earnings calls. They were really implying that they're basically having to give away their server stack. Let's see here. Robust AI server demand is lifting Dell's fiscal 2025 sales growth, yet lower product margin may be a modest drag on EPS. Bloomberg Intelligence yields $7.7 billion in AI server sales versus $1.5 billion in 2024. It's a pretty nice move, resulting in 8% sales growth overall. Dell's AI servers aren't profitable, though. Oh, there it is. But their mid-single-digit margins sit well below the ISGs, the Infrastructure Solutions Group's 11 to 14% target. Yeah, that's a problem. Yeah, JOLTS comes out in about 35 minutes. JOLTS at 7 a.m. I guess I should do that in all caps. There we go. Farmer Bread, I wish DocuSign, SoFi, and PayPal would pump so I can dump them. Oh. Are you serious? Yada members still can't access their savings because of the Synapse brokerage thing? I heard about that first like a week and a half ago. And people have been sort of circulating that for days now. I don't know if that's true. Let me go to Yada Bank, which is not a bank. Oh, yeah. Savings app CEO says 85,000 accounts locked in fintech meltdown. We've never imagined a scenario like this. Company has inadvertently been a source of pain for thousands of customers who relied on Yada. The crisis began May 11th. Oh, it's been going on for a while. Dispute between Synapse and Evolve led to the lockup of accounts at Yada and 24 startups. Synapse declared bankruptcy. 85,000 Yada customers with 112 million in savings have been locked out of their accounts. I want to divide that. That's an average of 13. It's a stimulus check per. So the average Yada Bank, which is not a bank, the average Yada Bank, not a bank, deposit is a stimulus check. Okay. Wow. Yeah. I mean, the money doesn't disappear, but once you go into bankruptcy, stuff gets locked up. That's crazy. That's interesting. Ooh, that's an interesting idea. E-Trade violated federal law on protecting customer privacy by stating DFE is their customer. I mean, I think the screenshots kind of give it away. And I don't think E-Trade revealed it. I think it was a Wall Street Journal leak. Like, the Wall Street Journal's like, oh, we heard this. You know, I don't think that's... yeah. I don't think that E-Trade publicly put that out. Anyway, did you realize we were already 2 minutes away from the bell? I did not. That kind of flew by, honestly. I was still planning on going to make another cup of coffee before having to worry about seeing what the market's going to do at the open and playing trading games. Bro, Nvidia's breaking out. Are you freaking kidding me? Oh, my Lord. It doesn't stop. Can't stop, won't stop. Oh, my... Oh... Look at this. Come on, man. It doesn't stop. I mean, I have exposure to it, so it's like I'm not opposed to it. But it's like, hey, man, can you do it when the market opens so we can actually trade it? Ah. Oh, well. Oh, well. Oh, let's do a quick little mic test. Yep. All right. Well, 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 my friends. We are getting close. We're about 40 seconds away. It's getting close. JOLTS come out in 30 minutes. The market opens in 30 seconds. Now. Gotta work on that timing. Anyway, Vegas event is coming up in less than 3 weeks here. If you haven't yet joined, go to meetkevin.com. Learn more about it. Learn everything we've got about finance. Here we go.
Because we know not to dismiss asbestos as a problem. Ever.
New York Stock Exchange, of course, where we are right here, but here's a look at the real-time exchange back at our headquarters in Englewood.
New Jersey, Corteva Agriscience did the honor, celebrating its 5th listing anniversary. Over at the NASDAQ, Nuvalent, a biopharma focused on oncology. All right, where do you want to start this morning? I'll open the board to you.
Well, that's a lot of red. A lot of red. Salesforce is red, trying to recover here a little bit. Nvidia is a little nervous about where it is. Tesla's selling down. Supermicro just had a big candlestick there. Well, that makes sense after the Nvidia push there. AMC's trying to push. GME is trying to push. And the Qs are trying to push. You were about negative 30 basis points at the start. And now you're going red again. Just as I say it, it just turns red. Come on, Tesla. Pick a direction. Well, Nvidia is picking a direction, that's for sure. That's wild. There goes Tesla. Go, Tesla, go! Somebody says, why is Tesla down? Mostly because of the potential for Tesla diverting chips to XAI, leading some people to think that's bad news. Some people say that's good for their cash flow. Some people say it's because they have enough compute already. Everybody's got an opinion on it. Obviously, we're waiting for Elon Musk to come out and say it's all fake news. Look at Nvidia fall, though. Nvidia's tanking. Not really tanking. I mean, the darn thing's up 40 basis points. The thing is, it's just pushing back to the 1150 line. So watch that. And, yeah. Let's see what happens here. So Nvidia keeps trying to move. It's trying to come back up. Okay. And then you've got Enphase somewhat rotating down here. Then let's see what else here. You've got Supermicro just went like fat green right there. That's pretty nice. That's a pretty solid pump there all of a sudden. You've got honestly, like everything is pumping right now. This is crazy. Okay. Let's see if it maintains. So what do you got? You got, Nvidia's trying to pump. Tesla's, careful around here. Look at that. It's already trying to flip a little bit. Then you've got Salesforce trying to hit a red candle there. Oh, look at that. It's right back down. You've got Supermicro. Everybody's trying to get a direction here. GameStop red. AMC somewhat red. Nvidia is the one that just is the gift that keeps on giving right now. Okay. And Tesla's right there at that 175 line. It's a pretty big line for it. Let's see what direction it wants to go in. Nvidia's trying to get its direction. Ooh, which just turned down. And Tesla, oof, breaking that 175.6 line. The first 15 minutes are so scary. They'll always operate like this. And yeah, all right, let's see what Jimbo's got to say. It's very interesting.
But I think something else is 21 times earnings. I mean, we're at the highs in terms of overall multiple. Now, a lot of that is pushed by, again, back to what is 30+% of the market, which is 7 companies.
Right, but I know, but when rates come down, we should be paying more for these. They're not expensive. What's expensive is enterprise software. And enterprise software is emblematic of what happened with GitLab last night. So GitLab does it. This is DevSecOps. Oh, my God. You got to be in all those. And when you look at GitLab, you say to yourself, no, wait a second. This company reported a very good number. And the stock is down because it's enterprise software.
Right.
And that Salesforce was so jarring. Now, there's a really good company, ServiceNow. Now, we've had Bill McDermott on. What are you laughing about? We've had Bill McDermott.
Yes, we've had Bill McDermott on many times.
And the stock's down 7% for the year, even though it's doing incredibly well. This is the multiple contraction when it comes to enterprise software. By the way, David, if you were going to be if you came out of school a few years ago and you wanted to be rich, you went into enterprise software. Well, now we know it's private credit. But enterprise software was king for about enterprise software was king for 7 years.
There was a time when, what you wanted to do was learn how to code. Now you don't need to actually learn how to code anymore.
And that's where I'm going.
ChatGPT will, and or any of the other generative will do the coding for you. Right now, kind of not bad, but very soon going to be better than everybody.
And Jensen was saying that you're not going to need any of these because they're all going to be done internally. And so you'll ask a question, it'll write the code.
Yeah.
Which means code writers forget about it, go do something else. And it comes out, and you get it. And the code people are superfluous. They're not yet.
What happens to the code people when they become superfluous?
Oh, they can do whatever they want. They went to Stanford. They're really smart. They can figure it out.
They will. They'll figure it out.
Oh, they'll figure it. You know what? It's time to end the tyranny of the code writers. You know what? They've been behind a lot of things that you and I don't appreciate.
That may be true.
And now, I don't know. Code writers, not going to elect any presidents, not going to have vineyards. It's going to be a new world.
Could be a new world.
You go out to Sonoma and Napa, co writers, you're not drinking their vintage. No way.
Could be a lot of dislocation as well.
Dislocation in the wine board?
No, of employment.
Oh, employment, yeah. I was going to say.
Of employment.
But you watch.
I'm watching. Don't you worry. I'm watching.
I'll tell you what else.
Tell me what else. What else you got?
You want the key to this market?
Key? Oh, sure. Give me the key to this market. Freeport.
Yes.
Didn't see that coming.
Because copper is integral to EVs and integral to the data center.
Right.
Well, I mean, if the data center rolls over, we know EVs are rolling over. Well, I mean, all I can tell you is that, the slow ones now will, later be fast. I mean, the times are changing here, David. What?
Times are changing,
Yeah. Go away from my window, Chief.
All right, well, the stock's up 35%, although it did not have a good year last year, Freeport, right?
Well, Freeport has been a commodity until now. Now it's the soul of a new machine. What that was.
Jim, I'm going to weigh in.
All right. Somebody here says Dell is moving. I want to take a look at what's going on with Dell. Dell. Yeah, Dell's actually up 3%. Possibly, there was a Bloomberg intelligence piece. By the way, if you're in Stocks and Psych, I sent out an alert. I don't know if the alert went through. Hopefully it did. But anyway, there was a Bloomberg intelligence piece where they were basically talking about how this, even though the Dell servers aren't sold on a profitable basis, the company itself could really increase their top line revenues, and then hopefully that sustains. So, and then hopefully they become profitable, right? So really kind of volatile day so far. You can see NVIDIA really wants to go to the 1150 here. And I expect a lot of volatility to kind of continue, especially between now and the JOLTS data, which comes out in 21 minutes. The JOLTS data could just destroy everything, or it could make everything. So very important. Watch CRM's now looks like it's trying to lose that 239 line. Tesla's bobbing between green and red. I think you get a lot of volatility here today. I think, this one's something to watch for if, you get like an Elon pump or whatever, where Elon comes out and says, fake news or whatever. And then people sort of digest the news about the chips and it won't be as big of a deal. Who knows? But that's something to pay attention to today. There'll be a lot of volatility on Tesla as a play today, though. So be careful of that. Then you've got NVIDIA here bouncing on the 1150 now. That's actually bullish for the broader market. That's a good thing. Let's see here. Okay, I'm watching that. Okay, cool. So looks like Enphase is trying to go green as well, though not very violent here in terms of how green. So not much excitement there. Supermicro is keeping that uptrend along with NVIDIA. AMC is really only up about 3.5 here. GameStop's down, down about 3.5 here. GameStop's down about 7. I wonder how those Keith Gill options are doing right now. The Keith Gill options for the 21st. They're now down to about $8. So these had gone up to about $10 there for a moment. And they were actually up at $16 for a while. Ooh, a lot just turned red. Look at that. So I think NVIDIA, so Tesla just turned red. It's right at that 175 line, though, which is an important line. Although it might break through that. Enphase turning red. Supermicro just gave up on that enthusiasm. NVIDIA's still trying to bounce here. And Dell's rolling over. So, yeah, you had about a 3% run there on Dell. A little bit of a rollover here now on Dell. Looks like you are finding that confirmation of support there at Tesla at that 175 line. I think these two lines, though, because you can frequently get a candle that runs down to here, these two lines are really important today for Tesla. So we'll see what happens on that. There goes NVIDIA. NVIDIA wants to pump. Come on, pump it up. We've got to pump it up. And Qs are trying to push up as well. All right, let's go on over here.
Still making 25 million.
Yeah, Les Moonves, yeah.
I don't know.
Yeah. Anyway, all right, that's what I got for you. What else you got for me? What else you got? There's some interesting stuff in your list here today.
You know, I still think that people are deciding that this Apple meeting is going to be very important now. This WWDC has not really mattered that much. So that's why I'm going to pivot right now to something that has a lot more to do with the zeitgeist of America.
You're not talking Apple anymore, which I would point out has turned negative on the day.
I can go that, but I just feel like I have something else in my mind.
Okay, give it to me. What is it?
The Big Smasher.
The what?
The Big Smasher.
The Big Smasher.
The Big Smasher.
I don't know what that means.
Oh, God. All right, here we go. Zeitgeist of America. All right, there's Chili's.
Oh,
Chili's has a Big Smasher.
Now
it's an LTO, which means, David, don't give out a lot of shrimp. They have the Big Smasher is a hamburger, fries, bottomless chips, salsa, bottomless non-alcohol drink. $10.99. Okay. Now, in comparison, they are saying Wendy's combo, which is Wendy's Double Dave and fries and Coke, is $10.99.
Right.
The Big Mac is $10.59. The the Burger King is $14.69. I don't think that's a fair comparison.
Where am I going to get the Big Smasher? Where?
At Chili's.
Oh, Chili's.
Now, the Big Smasher, David, is big and juicy and is being advertised.
Never heard of the Big Smasher. Also not super relevant. Qs are falling a bit right now, so a little rough in the start there for getting green.
We know that both of the candidates are tariffs. Biden just put tariffs. We know that that's always been Trump's ammunition as well. The one thing from a company perspective is if you start to get uncertainty from corporate taxes or tariffs, that's when you start to see CapEx spending pull back until we get more clarity around the election. That's not great for the economy, and it's not great for earnings long term. So I think there is a lot of volatility that we can see going into the election, even with a neck-and-neck election.
All right, Megan, thanks so much for joining us. Hope to have you back soon. Megan Horniman there, Chief Investment Officer over at Verdance Capital Advisors. Coming up, we're going to talk more about the battle for AI chip leadership.
Tesla's bouncing off that line. It's these lines. They've been good to me. I like to watch the lines, but no guarantees. I mean, it's the same. You're getting a very similar to yesterday, kind of almost consolidation in NVIDIA right now, where you're just going to spend all freaking day sitting at 1150. That would be very interesting. So I'm keeping a very close eye on this one. We'll see. I think that'll also guide your moves on. Although, look at Dell. Dell's moving much more enthusiastically than Supermicro. And AMC's got a little move here. Etsy, nope, gave up a little bit of a move. Costco's got a nice move. Bitcoin's up really nicely since, you know, the market opened. Market open was right about here. You had the volatile kind of like sell down, and now you're moving up. So you've got a bullish tailwind. Apple's selling down a little bit. Palantir's actually green. Wow. What are the biggest movers today? So biggest movers, Chipotle about 1% up. Dell, honestly. Volatility, Dell, Zim, Carnival. Yeah, Carnival was rising yesterday too. Faraday Futures, Crown Electric, Greenwave Technology, GameStop, AMC. All the momentum movers are down. Dell keeps going. Tesla's green. Nice pump on Tesla there. And the Qs, trying to get a green candle on the Qs. Trying to push back up there, although a little early to tell on Nvidia there. Yeah, a little stuck. A little stuck in the mud, aren't we? All right. Let's see if they're done talking about the big smash.
Yeah, no. My mantra is, after all these years of following everybody, nobody knows anything.
No. Call your counsel. Well, counsel doesn't say that.
They're taking a shot. And when the wind's at your back, it's great. When the wind's
on the one hand,
it's a lot harder.
No, I mean, I just feel like when I see that, I just say that in the end, there's someone in the room who just says, this is really good for us. And a lot of times that guy wins until Gensler calls him. If Gensler doesn't call, good.
What would he call about? What's the issue?
Did you buy calls? Did you buy calls and then pump it up?
before I put out a weird thing of a guy leaning forward
so
in
let's
a
say,
chair.
we do this ridiculous stuff where we recap what the hedge funds did that month?
Yeah, the 13Fs.
Okay, so which is so stupid. We should not do that.
Nothing.
So how about the last day of H, they buy a lot of GameStop. And say, oh my God, look at that. So-and-so bought a lot of GameStop. And then he blows it to Kingdom Come into your idiotic buying?
Yeah.
Legal.
Totally.
I rest my case.
There you go.
The defense rests.
Your invisible friend over to the left of you.
Thank you. Yeah.
All right, before we head to break, let's give you a
Frankfurter
bond.
There's going to be a lot of talk about, is it stock manipulation or not? We'll see. We shall see. It's been, it's going to be a crazy ride. Of that, I am convinced. Nvidia is potentially losing its 1150 here, which is not great. It's getting a little stuck there on the line. And yeah, cannot hold it up. Oh, come on, pump it up. We've got to pump it up. There you go. Right back to the line. The line works again.
The decade. And unlike what Jensen might have you believe, Moore's Law is alive and well.
Intel is pushing back against NVIDIA's claims that traditional processors are running out of steam in the age of artificial intelligence. For more, Ed Ludlow, co-host of Bloomberg Technology, joins us from San Francisco. And, you know, Ed, I think you made a very important point when we spoke about 10 minutes ago, in that the main thing that Gelsinger is selling, you know, these Gaudi 3 packages, which they say are going to be twice as fast in some ways as the package that you can get from NVIDIA right now. It's not here yet. And people aren't shelling out for it. So he can tell us that it's super fast and has so many transistors, but until people are buying it, it's not going to matter to investors.
Yeah, the state of play in the AI accelerator market right now is that Intel will probably do $500 million worth of sales in this fiscal year. AMD will do $4 billion, which is what they above what they previously guided, and NVIDIA will do $40 billion. You know, and it just gives you a sense of like the distance now between NVIDIA and Intel in this market for AI accelerators. Pat Gelsinger's story that he's tried to tell is about returning Intel to a technology leadership position. In other words, having the cutting edge of both production and product. And, you know, it was an interesting retort that he gave to Jensen Huang's idea, which is kind of the legacy chip names aren't keeping up. Moore's law is that the number of transistors on an integrated circuit double basically every year without any additional impact to the cost of production. But that was a law that was established by Gordon Moore, one of the Intel co-founders, in 1965. The point being, you're absolutely right. Like, we see what the end goal of Intel is. It's just that right now, the market position and the sales picture doesn't put them there. It puts them pretty firmly in last place.
Nonetheless, Intel has massive support from the U.S. government, investing tens of billions of dollars in the great state of Ohio. And, you know, are they poised? Do some investors see them poised to, over the longer term, 5 to 10 years, eventually catch up or maybe even overtake an NVIDIA or an AMD?
Well, Intel has the unique position that it actually manufactures...
Ooh, Tesla's pumping.
...semiconductors, right? So if you think about NVIDIA and its H100, H200, and upcoming Blackwell series, it depends on TSMC, a contract manufacturer, to produce them for them. Intel controls its own fabs, so it controls its own fate in that respect, in catching up on the technology leadership position. But it also has a potential viable business in making semiconductors for others. And the support of government subsidy, not just in the United States, but Europe as well, could see them achieve that if they are able to onshore the industries into the Western world. But the point and the frustration of investors, you show the year-to-date chart, down 40%, NVIDIA up 132%. At its core is that Intel has nothing to show for that right now. No big-name customer, but no tangible sales read through either.
In terms of the stock, I mean, this has given Intel a little bit of a pop. As you pointed out, I mean, it's 1%, right? It's an important event. What are the outlooks? What's the prospect for an Intel, for a Qualcomm, for an AMD in the face of the giant that is the Goliath that is NVIDIA?
Well, the one thing that they all agree on, whether it's Pat Gelsinger...
Oh, good question here. Somebody's asking, what are we hoping for on the JOLTS data? Yeah, so... really, the JOLTS data, I mean, the best case scenario, you just get stuff that's close to expectations, right? So at expectations is ideal because you're not getting any kind of, you know, massive like negative shock or whatever. So I would be looking at, you know, something around that 8.5 million number. Obviously, a bad catalyst that's recessionary would be under probably 8, you know, like a 7.9 or something. And then a good catalyst could be slightly above, but not too hot. Like, you don't want it to be like 10 million or 9 million because that's too hot, and that means maybe rate hikes again, right? So really at expectations would be ideal.
Not surprisingly, then, more sectors than not are lower. So it's a broad-based decline, as small as it is. The worst sector, energy, down 2.2%, in line with oil. Apparently, traders still not liking the idea that OPEC Plus does have plans at some point to take those production halts off. Materials also down significantly, down 1% to the upside. We have consumer staples certainly not being helped out by Bath & Body Works, although that's probably not a staple, more of a discretionary, and that sector is to the downside slightly. Real estate, industrials, healthcare. Let's take a look at a little bit of a one-off sector, which is the banking sector here in the U.S. KBW banks down about 0.5%, perhaps because we do have yields down. I think it's for a third day in a row. That's certainly not helping. European banks down too, and we had an interesting headline coming out not so long ago, Matt. The ECB is demanding more CRE loan provisions from some German banks. So we do have 2 German banks down, including Deutsche Bank down 2.1%. Really a reaction to that headline. They have, I believe, about 7% exposure of their loans to CRE. So some tightening down there and some negative bearish action for banks here in the U.S. and over in Europe.
All right, Abigail, thanks very much. Abigail Doolittle looking at the banks for us. Just 23
Alrighty, we're getting close, about 6 minutes away from our catalyst.
In our trading diary, this is Bloomberg.
All right, flip on over here. Oh, yeah. Nope. All right.
Let's get to stop trading. You always learn something here, and we got a couple of minutes. So use the name and then tell us why.
Okay, so Netflix is doing advertising now.
Yep.
And you can use a broker for advertising. A lot of people use Google because Google has got both sides.
Of course.
Then Jeff Green has been the CEO of Trade Desk and has been wanting to crack what he felt was a monopoly in advertising. Now he has Peacock and he has Disney Plus. Now he got Netflix. Netflix, he's handling the demand side platform. Now this is important because Jonathan Cantor is the Assistant Attorney General for Antitrust, is suing Google, saying that they're too powerful. I say, wait a second. How powerful can they be if Trade Desk just won the biggest contract out there? And that maybe the Justice Department's case is outmoded by technology.
Interesting.
And Jeff has the greatest technology. He's also a man who has been against Google, obviously, in this lawsuit. But I would love to hear Andrew speak directly to this.
Yes, because I think Cantor and Lena Khan are both going to be at the summit that I referenced earlier.
Amazing that we're not there.
Which is great. And obviously,
here.
antitrust has figured so prominently in so many areas, including, by the way, liquor and things of that nature lately is now a new focus.
Southern Spirit Glacier, which is the king of that area.
But obviously, in my world of mergers and acquisitions, I had no idea Trade Desk was a $46 billion market cap company.
They've been on 5 times.
Yeah.
And I don't know if Jonathan Cantor is aware of how they've really broken the monopoly of Google. So if I were arguing the case of Google, I say, what are you talking about? Trade Desk.
We just lost the contract to Trade Desk.
So I think that the case gets weaker and weaker and weaker. Whereas I've been liking what the FTC's been up to lately.
Got it. No, I know, right. You actually like the, all right, tapestry deal. Let's find out what's on Mad tonight.
All right, so it's a plethora of companies.
Yes.
I have.
NVIDIA just broke that 1150 number to the downside. So you are losing some of these support levels. It's probably because of nervousness over data coming out within the next few minutes. Not unusual or abnormal to see a red right before data. Looks like the market's trying to sort of prepare itself or pre-price in, or however you want to put it, for that data release, because we're getting JOLTS, factory orders, durable capital goods spending. It's a lot of data to cover. So we're going to be covering that in about 3 minutes. So it is going to be a catalyst for trades today. As you can see, the Qs are giving up a little bit as a result of that. Tesla's having a hard time. It's trying to break out over here, losing its 175 right now. Not so great. You got that 174 floor, which we were touching a little bit earlier. You've got NVIDIA that looks like it's going basically straight to the 1140 number. Then you've got Salesforce that's stuck. It's not really moving anywhere. At the line, you've got Supermicro that goes red again, and Phase red again. The Qs are basically where they were pre-market, which was about negative 35 basis points. And you've got Carnival Cruise Lines is giving up a little bit of its enthusiasm. Costco's giving up some enthusiasm. You really need a license to keep going here. Even Bitcoin's getting a little nervous, although it's up like $600 from where we were this morning. So let's see what happens with the catalyst of the news cycle. Ooh, take a look at that. Trying to get some green candles there again before the news. But I think a lot of this is just going to come down to what happens as we get these numbers that come out. So we'll be watching really closely here. The goal, obviously, is to make some money. So let's see what the trades are. Again, I think bullishness would be you want strong orders and you want jobs roughly at expectation. That's really what you're looking for here. Does look like you had a little bit, maybe too much of a sell down there. You're already getting some green again on the Qs. Dell's not really holding up the way it was. And NVIDIA is going to try to get back to that 1150 number. Let's see if Tesla's going to be able to break out of the trading range that it's in as well. Being right there at that 175, it's sort of poised for a breakout right at that level. And now it's just sort of a matter of time to see, all right, what direction are we going to go here? So we'll see. And the data might help with that. So we're about 30 seconds away now from the data. We'll watch the Qs here. We'll see what happens. And getting close. A lot of red right now in the market. A lot of nervousness. Oftentimes, though, even just like the nervousness of the market itself can lead to this sort of activity where markets are anticipating that, oh, news could be bad. And then as soon as the catalyst clears, some of that pain goes away. So we'll see what happens as, okay, data comes out. JOLTS comes in at 8 million, which is good for rate cuts, and orders come in stronger than expected. It's not under 8, so this is positive. A little lower on JOLTS, that's good. Factory orders beat. Factory orders ex transportation beat. Durable good orders, 0.6 versus 0.7, that's pretty close. Capital good orders 0.2, that's pretty good. This is pretty. I'd say overall this is good. This is good. This is not a bad report at all. It's sort of indicative that you've got orders, you've got jobs, you've got the potential, to say, hey, maybe rate cuts to come. And you've got a prior revision down on JOLTS as well. You went from 8.488 to 8.355. Factory orders got revised down last month. The downward revisions, it's up there, 0.7 down from 1.6. It's a pretty good revision there on factory orders to the downside. So it takes a lot of the heat out of the economy. So a lot of heat getting removed from the economy. That's suggestive of, hey, we can get to interest rate cuts. We can really start pricing in accommodative monetary policy. I'd say overall this is good. Again, I was worried that if we got a number under 8 mil, it'd be a little too soft on the jobs data. But I think overall this is actually pretty good. And I think that's why the market's reacting positively. Obviously, who knows if it's going to be able to hold on to these numbers. The market is so volatile right now. But that does seem to be a positive for the market. So looks like the Qs are nicely trying to pump right here. You've got Nvidia that's going above 1151 again. You've got Enphase that's going green again. You've got Tesla that's going green again. Big candlestick there on Tesla. You've got Dell that's moving up again. All of your same movers are moving as they had been. And you're seeing some good action. I don't know if it'll hold, though, but let's listen to how they convey it right here.
And what we're getting from Washington. So it's a good opportunity for CEOs to really have the conversations about how the politics and policy are impacting their business and how they plan in this environment where there's tons of uncertainty, David. That's the vibe here.
There certainly is, with an election obviously looming as well. Sarah, we'll be back to you soon and often. Thank you. Let's get to some jobs data. It was out just moments ago. Rick Santelli has it for us. Rick.
Oh, Rick.
Yes, David. Watch yields fall. Watch stocks rally. What's going on? Job openings and labor turnover was just released for the month of April. Always 2 months in arrears, and it came in definitely lighter than expected. We're expecting a number around 8.3 million. 8,059,000. And what's interesting here is last month's 8,488,000 gets revised down as well to 8,355,000. And whether you're looking at last month's revision or the current one, slightly above 8 million, they both.
Keep in mind, bond yields just fell 7 basis points, too. We're at 4.33 on the 10-year.
February 21, when it was under 8 million, that is the comp. And yields are moving lower because of the implications for the Fed and easing based on potentially a less tight labor market. Factory orders for the month of April up 0.7, near expectations, but a really big negative revision from 1.6 original to only 0.7. Factory orders ex transportation up 0.7, so we could see transportation orders didn't negatively affect that number. Last month, lose 0.1 from up 0.5% to only up 0.4%. Durable goods orders. Now, these are April finals, replacing mid-month reads. So the mid-month read of 0.7, 0.7%, now moves to 0.6%. Strip out transportation, lose a little bit. It remains at 0.4, 0.4, exactly as expected, exactly as the mid-month read. Now, let's look at capital good orders, non-defense ex-air, that's a capital spending proxy, up 0.2, it lost 0.1 from its mid-month of 0.3, 0.3%. And finally, switching gears from orders to shipments, they remain up 0.4%. The JOLTS numbers and the weaker than expected revisions certainly propelling yields a bit lower. And do keep in mind, We are now hovering very close to that 430 level in 10s, which really held and caused us to bounce close to 470, a very important technical area to pay close attention to. ECB Thursday, will they cut? There's many more voices that think they won't, even though German unemployment jumped in their latest reading. David Faber, back to you.
Hey Rick. A little bit of a red candlestick there on the Qs after the CNBC readout.
A greater likelihood of a September rate cut by the Fed before these numbers. I would assume this might solidify that view.
Yes, it definitely should solidify that view. However, it's going to be very fascinating to see what the ECB does Thursday. Many believe these are coordinated moves, so maybe it'll tip their hand a bit for how we will start to behave if the ECB moves to lower rates first.
Rick, thank you. Rick Santelli. Now let's get back over to Sarah as well. This is typically the time in the show when Sarah has all sorts of exciting charts about the macro economy, although I know today you have excerpts from your interview with the IMF director, right, Sarah? Yes.
Right, yeah, and I would say that the JOLTS report, the job openings number, is indicative of what we were talking about, increasing normalization. Job openings were sky high in the last few years coming out of the COVID pandemic, and it was one reason why the Fed was looking at a tight labor market and seeing inflation as still a problem. As that number comes down, and we're not fully back to pre-pandemic levels on job openings, but moderating here, the soft landing story comes intact. And that is exactly the phrase that the head of the IMF, Kristalina Georgieva, used when she described her outlook for the global economy. Here's what she said she's seeing.
First thing we see is a world economy that has proven to be more resilient than we feared some time ago. In fact, the last 2 years, global GDP is almost a percentage point higher than we thought it would be in 2022. So we gained 6.7% real GDP in these last 2 years.
And why are we in better shape than the IMF and everybody expected? Well, number one, the resilience of the U.S. economy, which has been a huge global story and a big driver of growth. And then also emerging markets economies, which she was quick to point out are in very different shape than they have been coming out of other crises. Their fiscal positions are in better shape. Their growth trajectories are more resilient than we've seen. And for those two reasons, she expects the world economy to land softly. She says inflation will continue to come down. She said that interest rates will come, not necessarily coordinated, I think in a nod to what Rick was talking about and the fact that we are expecting a cut.
Oh, yeah, no, we'll get the ECB cut first. I think, honestly, this week. I made a video on it. If you haven't checked it out yet, look on the main channel. I did a video on the ECB rate cut, what it means, maybe what sectors to invest in, as recommended by... was it Morgan Stanley or Barclays? It might have been Barclays. I think it was Barclays. Anyway, you'll see it.
Right now, certainly what we're getting from both parties, the Democrats and the Republicans, she really came out strongly against tariffs, against trade barriers, as hurting growth, as fueling inflation, and even had some criticism around industrial policies, which she said are happening in U.S., in China, and in Europe, as she says people don't learn the history lessons as it relates to their economy, acknowledged that there are national security reasons, given what happened, for instance, with Russia's invasion of Ukraine, to bring production of certain manufacturing items, chips, commodities at home. She acknowledged the reasons behind it, but really is worried about the economic fallout from that. So when she goes to G7, in Italy, and she goes to these G20 meetings, David, I think it's interesting that she's the one voice there who says, no, and she used the word willy-nilly. No willy-nilly industrial policies. We're seeing a lot of them, and they don't make a lot of economic sense. And it is something for investors to ponder as how that's going to shake out in the coming years and even potentially decades.
Well, she's certainly against trend. There's no doubt about that, given...
Exactly.
Yeah, given where we are right now and what seems to be the divide, so to speak, that only widens in terms of sort of two global economies, so to speak, China and the U.S. Sarah, you're going to stick around, I know.
Yeah, China is going super hardball with Russia, too, on their gas pipeline deal. And I think it's funny because China's just shrewd. They're so smart. They just play them so hard. BTC is about to hit 67,000, by the way.
At this point, futures perhaps pricing in a quarter-point rate cut in December. Odds, though, of a September move, and you heard Rick mention this as well in answer to Mike's question, are edging up. Our next guest thinks monetary policy not as restrictive as rates would suggest. He's Jefferies' chief market strategist and a new CNBC contributor. Welcome.
Thanks, David.
You're welcome.
I like that. I like the combo title.
Happy to have you as a contributor, although you always contribute.
His name is David Zervos, by the way. Yes, we'll just,
yes, and to those who don't know, David Zervos. All right, so you've been saying this for a while that things are a bit less tight, I should say, or less restrictive than we otherwise would think because of the balance sheet.
Yeah.
Continues,
and I think with the QT.
Sorry, 70K, not 67. My bad.
To continue even more aggressively than I might have even thought at the beginning of the year. So I think that's been a helpful tailwind. I guess I don't have a lot new to say on that subject. The new stuff seems to be the beginning of this month. Just a lot of trades getting unwound, a lot of macro stories, whether it's copper, the yen, oil, a lot of stuff happening that seems a little bit out of the ordinary to me. Mike and I were talking about that before we walked on set. And I haven't put it together. I don't know what the month of June is really all about
so
yet.
you recognize it as out of the ordinary, but
it
you're not quite sure.
Well, I think there's a seeming change, at least budding change of character. I just wonder about where you've seen Treasury yields back off. You see real higher sensitivity to any sign of softening U.S. growth. I guess that was the ISM reaction yesterday. And yet usually when yields have come down, you've seen, small caps and cyclicals and banks rally, and you broaden out the market, and then the big tech stocks can maybe take a breather. Didn't happen yesterday. I mean, obviously, we're kind of churning around on equities. I just wonder what you think the message is, bonds rallying in the face of these numbers, which I'm not sure if the overall complexion of the growth picture has changed.
And the bond rally was pretty big yesterday, and there was no data, right? There was no real story for that.
I guess the ISM, but yeah.
Not a huge one. But I guess for me, I don't know. I'm going to wait and see. My baseline for the summer, David, is kind of a lower vol, Fed's waiting, patient, well-positioned, all the words they've been using. They're not in any rush. We're going to all talk about politics and what Trump versus Biden means, and that's going to get, hotter and hotter as the debate happens. But I think the economic story, and from the Fed's perspective, is very much on hold. We need 3 months of something to confirm there's a move, if at all. And so I feel like the volatility, it's a summer volatility story unless we get a big shock of some, geopolitical nature. So that's kind of how I'm thinking. I'll say I was a little surprised at the size of the market moves to start the year. I thought, and the coordination unwind of a lot of trades that I hear our clients talking about. So we'll wait and see. So a little bit of to be determined.
Yeah, Sarah's got a question.
David?
Yeah.
Yeah, I'm just curious why the equity market isn't responding better to the rally in bonds. If equity markets have been craving Fed cuts, lower bond yields, soft landing story, shouldn't this be received much better?
You would have thought so. The story because I'm looking at commodities as well, just seeing copper 10+% off the highs, everything. And oil, the oil start to the year was very interesting to me. So, we're back to...
Start to the year or the month?
Start to the month, yes, Mike. But, we're back to really low levels.
Yeah, we're
in
back
oil.
to almost we're basically flat on
unwound the year after kind of a lot of reasons why you think it should be higher, right? So it feels like a slowdown story getting priced in. If I had to make my guess, people are getting more nervous about a period going into the election maybe, and Sarah, you're there talking to these CEOs. This is a time where you're not probably jumping into a big investments project. You're going to wait and see what happens until November. So maybe we get that 2 quarters or so of slowing / stagnation. And
so
and
what
maybe
are you
the market's
watching?
sniffing
What are you
that
watching
out.
to confirm your suspicions?
Probably what Sarah was just talking about, just seeing if the S&P can react better to some of that easing pressure that comes into the fixed income markets. If it's not, then it really is confirming that people are more nervous about either the uncertainty related to the election or just a more significant slowing than they had priced. But again, it's early days. I have to say, I thought the price action seemed extremely aggressive for the amount of data or knowledge that we got just for the beginning of the month.
So it seems like it could just be some kind of mechanical flows or something.
Could be that.
Yeah, we'll see.
Yeah. These markets do like to, they take momentum and they go to they go to far reaches, when they see they can take stops out and the like. So.
Gotcha. David, thank you.
Always a pleasure.
Welcome.
Boring. All right, what's happening in the day today? So in the day today, the Qs are honestly falling. Not good. It's a rough morning here on the Qs. You're going straight down. It honestly, it feels a lot like Friday and Monday. You sell off at the beginning of the day, and you rally into the close. It's rough. It's really rough. It's almost the same pattern that we got. You got the consolidation on NVIDIA. That's scary. You've got Carnival Cruise Lines keeps running, but I don't know what's going on over there. Is probably momentum driven versus the orders that we're getting. Tesla's at the 174 line. That's a pretty important line for Tesla. If it breaks that, it's not good. Enphase, though, look at that. Down at the 126 support line. Also important. CRM couldn't hold it up on that line right here. Couldn't hold it up today. GME is consolidating. AMC is consolidating. This is very similar to the setups that we saw yesterday. Where you had, and the day before. Let's look at it. I'll go ahead and show you. Now, will today be different? I don't know. I don't like the phrase "this time is different," but jump on over to QQQ, and what you're going to find if you go to the actually, you could just go to the hour chart. Look at the U shapes right here. It's actually probably a little easier on the 5-minute to identify it. And then we'll go to the average candlestick just to fill it in. U shape, sell off first half, recovery second half. Sell off first half, recovery second half. That's the MO. The last 2 days. That's been the MO. So we'll see how that continues. Sup, dudes? You guys want to say hi? I need to charge my watch. Oh, okay. You got to set up your charger somewhere else. What happened to your 3D printed one?
I don't know where the actual charger is.
Oh, because we put it out in your mom's backpack.
Mom just bought me a new one and it's coming today.
Okay, perfect. High five. You want to say hi? You 3D printed a charging stand, didn't you?
Yeah.
It's pretty cool. What about you? Do you 3D print? No? Come over here. Don't have fun today, okay? But work on that multiplication. I mean, the addition.
What addition?
Like 4 plus 9, 5 plus 3. You can do all that, right? Yeah. Yeah, good job. Have fun, dude. I mean, don't have fun. All right. So, there's a thesis, by the way, that Tesla's going to bottom out today at the 174 line. The 174 line's pretty strong. No guarantees, but that's a thesis that Tesla might bottom here today. And then, of course, all it takes is like a tweet from Elon that undoes some of the CNBC drama from this morning. Dell continues to rally, by the way. It's still pumping it up. So go Dell. Then you've got, Q's fluctuating here. It's a little bit of a, still consolidating on NVIDIA. Oh, it feels so much like Friday and Monday. No, please be different. Those days sucked. Yep, there you go. See, that's bullish. BTC hits 70. That's a bullish day. Somebody says Nick T posted. Okay, let's see what Nick T has to say. Nick T. Labor market imbalances continue to ease. Let's go over here. Labor market imbalances continue to ease. Job openings fell below 8.1 million, bringing the vacancy to unemployed ratio down to 1.24, the level reached in October 2019. Well, there you go. Getting closer to a 1-to-1 balance. It's pretty good. Let's listen to Sarah for another minute or so here.
He said just given the amount of, first of all, debt that we've taken on, that changes the equation, right, for where bond yields ultimately should be and should settle. He characterized the economy, you just heard, as fairly robust and resilient and being buffeted by two tailwinds like fiscal spending and AI, by the way, something he's very excited about. I asked him in the final question, what's most exciting? What's the biggest opportunity for you right now at Goldman, and something the audience can take away? And he mentioned the generative AI possibility. But those two sort of more structural, at least longer lasting tailwinds, keeping the economy from going to recession at a time where we have such high debt and deficit levels, makes the case for higher yields.
That's absolutely where most of the capital in motion is headed, I would say, AI investment. All right, Sarah, see you in a bit.
AI, everything's AI. Tesla's following the lines again, bouncing off the 174.16 line. It's a pretty big deal. I think really what you need is Elon to wake up and be like, this is some bullshit. And then you get a tweet from Elon. And then you get giant candle. It's very common, by the way, that from the 174 line, it goes to 178 or 182. Like, those are common lines. It's hard to trust it, and it's hard to play it if you're gonna get emotional about the 1 minute candlesticks. Tesla's one of those, like, in those lines, you gotta have a lot of faith. No guarantees, obviously, but it does actually look like the market's trying to push up the Qs, and it looks like Dell's continuing to push, and so is Carnival. Carnival's cranking. Dell slowing down a little bit, but Carnival's cranking. I don't even know why Carnival's cranking. I just see the momentum. It was doing this yesterday as well. I was looking at Carnival yesterday. I'm like, what's going on at Carnival? Why is it acting like this? I mean, like, I'm not opposed to it. Like, hey, it's something you could trade, but Peel Hunt upgrades to buy as debt burden eases. Now you're getting some fundies in there too. Of course, as I mentioned it, you get a red candlestick, but that's like the story of my life, you know. It's funny because I always look at, I always joke, I'm like, the second you sell is when the stock skyrockets. The second you buy is when the stock tanks. The way trading works. But I think if you overcome that psychology with like a DCA mentality and you don't go full position too early, it's a little easier to operate in trading worlds. You did get a red candle there on Dell as well, so it's probably a little bit more macro. Yeah, kind of just across the board, got some red candles there. Look at that perfect bounce on Enphase again. Oh, that's getting to be a juicy line right there. Coins rising. Bitcoin did in the last minute give up that 69 or 70K level, but I think it'll be back there today. All right, folks, I'm going to push the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. All right, well, there you have it. Thank you so very much for being here. We'll see you all in the next one. Good luck and goodbye.